You spent 12 hours today analyzing charts, watching webinars, backtesting strategies, and monitoring your positions. You barely ate lunch because you were studying price action. You stayed up past midnight reading trading books and taking notes. You're exhausted, but proud because you're working harder than everyone else, and hard work always pays off, right? Wrong. In trading, grinding harder usually makes you worse, not better. That 12-hour session didn't make you more profitable. It made you tired, desperate, and prone to mistakes. While you were analyzing your 50th chart, millionaire traders were at the gym, having dinner with friends, or taking a nap. They understand something that destroys most traders. Effort and results have zero correlation in trading. Sometimes the hardest work you can do is closing your laptop and doing absolutely nothing. What I'm about to show you are 3 brutal truths about why your work ethic is sabotaging your account. More screen time equals worse decisions. Sitting in front of charts for hours feels productive, but your brain isn't designed for sustained decision-making. After about 2 hours of active trading or analysis, your judgment quality drops off a cliff. You start seeing patterns that aren't there, talking yourself into marginal setups and missing obvious red flags. That 8th hour of chart watching isn't adding value. It's destroying the quality of thinking you had in hour 1. Think about it like this. Your first hour of trading uses fresh mental resources. You're alert, skeptical, and selective. You easily spot the difference between great setups and okay setups. But by hour 6, you're mentally exhausted and desperate to find something to trade. That British pound setup you would have instantly rejected at 9 a.m. suddenly looks decent at 3 p.m. because you need to justify all those hours staring at screens. Traders confuse activity with productivity. They think spending more time watching markets gives them more opportunities to profit. Reality works backwards. The trader watching charts for 12 hours takes 10 trades and makes 5 good decisions with 5 bad ones. The trader watching for 2 hours takes 2 trades and makes 2 good decisions with 0 bad ones. Same number of good trades, but the exhausted trader loses money on the bad ones. Your brain processes information better with breaks than with marathon sessions. Step away for an hour and come back. You'll see things you missed when you were deep in chart hypnosis. That fresh perspective catches mistakes and opportunities that disappeared while you were grinding. Professional traders structure their day around mental freshness, not maximum screen time. The practical shift means setting hard limits on analysis time. Maybe you check charts 3 times daily for 20 minutes each. Maybe you watch for 1 hour in the morning and 1 hour in the evening. The specific timing matters less than respecting your brain's capacity limits. When your time is up, you're done, regardless of whether you found trades. Understanding screen time limits leads to the second truth about effort. Studying more creates analysis paralysis. You've read 20 trading books, taken 5 courses, and watched hundreds of YouTube videos. You know every indicator, every pattern, every strategy ever invented. Yet you're still not profitable because all that knowledge created a problem. You now have too many ways to analyze every trade. Your brain cycles through conflicting information, unable to commit to any decision because something always contradicts something else. Here's what happens. You spot a euro-dollar breakout that looks perfect. Then you remember that expert who said breakouts fail most of the time. Then you remember the other expert who said breakouts work great in trending markets. Then you check if the market is trending, but you learned 7 different trend definitions, and they're all giving different signals. 30 minutes later, you're paralyzed while the trade moves without you. Knowledge creates confidence only up to a point. Beyond that point, additional information breeds doubt and confusion. A trader who knows 3 reliable setups will outperform a trader who knows 50 setups. Because the focused trader actually takes trades while the informed trader is stuck evaluating whether setup 47 is better than setup 43. The real work isn't learning more. It's learning to ignore most of what you've learned. Professional traders deliberately limit their knowledge to a few concepts they trust completely. They might know about indicators they don't use, patterns they don't trade, and strategies they've rejected. This selective ignorance lets them act decisively while you're still researching. The fix requires unlearning, not learning. Pick one strategy that makes logical sense to you. Ignore everything that contradicts it. Stop consuming new trading content for at least 3 months while you master what you already know. This feels uncomfortable because doing nothing feels like falling behind. But consumption without implementation is procrastination wearing a productive disguise. Understanding information overload prepares you for the final truth that wrecks hardworking traders. Trying harder makes you force trades. Your work ethic creates psychological pressure that destroys your trading. After spending all day analyzing markets, you feel obligated to trade something to justify the effort. After working so hard to become profitable, you feel entitled to profits. This effort to results expectation makes you force trades that don't meet your criteria just to feel like your hard work is producing something tangible. The pressure builds like this. You wake up early, sacrifice social plans to watch charts, and pour energy into your trading. By afternoon, sitting on zero trades feels like wasted effort. Your brain starts rationalizing marginal setups because taking a questionable trade feels better than wasting your entire day. The work itself becomes the problem, creating emotional need for validation through activity. Traders who work hardest often trade worst because they're compensating for effort with activity. They equate working hard with deserving profits, so when profits don't come, they work even harder and force even more trades. This creates a death spiral where increased effort leads to worse results, which triggers more effort, which produces even worse results. Professional traders understand that markets don't care about your effort. You can work 18 hours and make nothing if your setups don't appear. You can work 2 hours and make a month's income if the right opportunity shows up. Effort and opportunity are unrelated variables, but your brain desperately wants to connect them because that's how normal jobs work. The brutal truth is that lazy traders with good systems often outperform dedicated traders with mediocre systems. The lazy trader takes 5 trades per month because that's all their system generates. The hardworking trader takes 30 trades per month because they're putting in the work. The lazy trader makes money on their 5 good trades. The hardworking trader loses money on 25 forced trades and makes money on 5 good trades, resulting in net losses despite superior effort. Breaking this pattern requires disconnecting your self-worth from your work ethic. Trading isn't about who tries hardest or sacrifices most. It's about who can sit doing nothing until their specific edge appears, then execute without emotion. This means some weeks you work 2 hours and make great money. Other weeks you work 2 hours and make nothing. The hours don't change because they're based on your system's requirements, not your need to feel productive. The shift happens when you redefine what work means in trading. Work isn't screen time, education, or analysis. Work is following your system exactly as designed, regardless of how much or little that requires. If your system says watch for 1 hour daily and take trades only when X, Y, and Z align, then working hard means doing exactly that even when it feels lazy. Comment below whether you're guilty of overworking your trading and how many hours you're actually spending in front of charts. Because success in trading often looks like laziness to people who measure effort by hours invested. The traders making real money aren't grinding harder than you. They're being more selective about what deserves their effort. Master the discipline to do less, know less, and want less from each trading session. And you'll discover that peak performance in trading comes from strategic underwork, not impressive overwork. Your competitive advantage isn't outworking other traders, it's outresting them so you have clarity when they're exhausted.